Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to be with you as we pick up the pieces of what was an interesting week. Now, not a great week on US markets. Correspondingly, in patches, not a great week for Aussie markets, but it really depended on where you were. And it's my great hope that you are in a bunch of some very, very strong uptrends that we're going to look at later on today, and if anything, short a bunch of very, very weak downtrends. So the system, I think the model is actually working pretty well. Maybe we didn't get the portfolio management part of it right. We'll talk about that in a second. But I think otherwise, on a setup by setup basis, I think we're going pretty well. Well, look, maybe that's a bit of a mystery, all of that commentary, but we'll talk about it after we do the disclaimer, which says that everything we're going to discuss tonight is general in nature. That means it has not taken into account your personal financial circumstances, objectives or needs. So before making any decisions based upon this very general advice, you should consider it very carefully in light of your personal financial situation, or seek outside help, professional help, as to its appropriateness for you. The rest of that disclaimer is important. It says that markets and trading can be risky. Markets don't always go the way we want them to. We could lose money. Always remember, it's you who's responsible for what you do and not me. With that in mind, let us get the requests rolling. You should have somewhere in your Google Meet window a chat, place to chat and get your requests rolling there. I will do offline requests first. Anything from stocks, crypto, commodities, indices, bonds. If I can get a chart, I'll give you my analysis, or it could be anything to do with the 3 M's of trading: the methodology, money management, or mindset. Let us head first to the portfolio management model. I sort of indicated in that intro, maybe this didn't go as well as we would have liked. We were here. I only speak to you once a week, and the candle that I get to talk to you on, that's all I can give you an opinion on. I can't see what's going to happen into the future. And looking at that one, we can see a very nice V-shaped rally. We can see holding of the long-term uptrend ribbon and a very shallow pullback. Certainly, I did note that candle is disturbing, but in and of itself, it's not enough to push us out of this idea that whilst a light green ribbon, the short-term uptrend is holding, decent candle, that Friday candle there. We could be at 2/3. I think I'm pretty sure I said we're at 2/3, and if we were to get close above 18,018, we would start to move then to a full risk position. That's what happened. Literally the very next candle, opened significantly lower and then just kept going through that short-term uptrend ribbon. And again, I can't tell the future. It should have been pretty obvious to you then that we're in a different situation, and certainly we're not increasing risk at that stage. We're certainly probably happy to stick with what we've got. Tighten stops on some trades. So we'll be more aggressive on our exits, and just be a little bit more neutral, sort of a 50-50 rather than a 2/3 at that stage. This candle here is not good. I mean, the market tried to rally, got pushed back. Anything where that shadow is pointing upward, don't forget, shadows point to where there is excess demand or excess supply. Shadows that point upwards are pointing to excess supply. There can be no other interpretation. That's what I love about my candles. They are black and white, and the only way you can get that upper shadow is if you're pushing up there. The demand side is optimistically coming back into the market to quote unquote buy the dip, and yet they are met with a wall of supply that pushes them back. Happens for a second day. Maybe on that day there was some better than expected economic data, or some central banker didn't say anything too horrible, and again we're trying to push up, and just that natural ebb and flow. I mean, there's naturally just 401k money, this what the Americans' version of superannuation, just money coming into passive funds. Passive funds are still buying, but these shadows are often the fingerprints of, we say fingerprints of supply, but they're often the fingerprints of what the active fund managers are doing. They're taking advantage of that passive flow, and then there's just too much supply, particularly from active managers, that pushes it down. And that's the Friday we have, but that's the candle we've got. Now, I'll probably tell you something here, and then tonight you'll get the biggest, most amazing white candle. That's happened to me as well on a Monday night. But I think what we can say here is, I think, fairly neutral, 50-50 in terms of cash. and invested. And on the stuff that we are invested, look, I still think you're probably, around about 2/3 long and 1/3 short at this stage. We are still long-term uptrend. That hasn't changed. I am disturbed. I am concerned. You would have read my analysis tonight in the market indexed evening wrap that this 18,018, 18,129 level is lower than 18,671 in a healthy bull market, in a state of demand side control, of excess demand, of buy the dip mentality. We really shouldn't see that occur. That is not good price action, and it hasn't occurred, or it has occurred with poor candles. A couple of ways I could have said that. I don't like the, I'm going to say predominance of black candles really since 18,671 now. I think that's fair to say. And it's not just the number of them, it's the nature of them that is concerning me. So I do think a fairly neutral bias based upon the Nasdaq composite is the way to go. We have been also looking at the Russell 2000. I don't think there's anything there to push me off this idea of neutrality. And when we bring it back to the third, I guess, spoke of this portfolio management wheel, it's actually a little bit of a conundrum because whilst this big wipeout here, what would that be? I guess that's Wednesday last week. That is an awful candle. Things aren't so bad, I think, where we nearly nudged 50% retracement at the balance point of that supply side candle. It tells me there's actually a little bit of demand washing around the system. The shadows weren't as pronounced there, so the supply side isn't having as much of an impact. I'd say it's a little bit more than just passive funds buying in. And today's candle is actually very impressive. I really like that lower shadow, the way we came back there, closed a little bit off those highs, but certainly holding that light green trend ribbon, the dynamic demand zone there in the short term. Obviously, the long term there is not challenged like it is being challenged on the Nasdaq, and certainly looking better even than the Russell. So we are starting to see a little bit of a disconnect between the way you might manage your US portfolio. Probably haven't talked about this up to this point because I think it's been fairly consistent. Homogenous, you might say, using one or you're using US indices to manage risk across the board. But I think we're warranted in having a little bit more risk in Australia potentially than the Nasdaq. And there's no hard and fast numbers. Remember, this is not a black box system. This is a common sense system. Let's have a little bit of a whip around the grounds and see if there's anything to push us off this decision that I've made. Hopefully you can make your own decision as well, or you have your own opinion on where you think your portfolio management should be. And I hope that's the case. You're starting to form those views based upon what you've learned. Let's head over to Europe, and that doesn't look good, does it? That certainly reaffirms this, or affirms, if you like, or reinforces this need, I think, to be lighter on the risk side of things. Not great candles on the DAX, but still okay in terms of its trend. The UK pulling back there, a few black candles in a row. Actually, Spanish market not too bad. In Asia, Asia's typically bad. Sorry, the Hang Seng in China's typically bad. Nikkei's not so bad, but coming off there and breaking below that long-term uptrend ribbon, that is a problem because we don't like to see things break below their ribbon, get up to the ribbon and fail again. Again, all we're doing here is looking for things that would push us off our view, and I don't think I've seen any of it. That's as bad as it always is, but it's not helpful, and certainly is consistent, and that one's really bad too. I think it's consistent with this. No, not that. Not that. It's inconsistent with that. It's consistent with this. That's what I meant to do, and it's consistent with this. Okay, so this is that two-tier or two-speed market that I spoke about at the start, where as a trend follower, some of our trades are going really well because we are in, I thought that was going to look a bit better, but certainly there's a bunch of them in there. There are still a bunch of them in the XTJ that are still looking pretty good. There's quite a few in technology that are looking very good. There's actually quite a few now in property that's looking very good. I'm seeing that property index, the MVB, M for Mary, V for Victor, B for Bravo, coming up as well. That's the ETF there for the property sector. The global staples index is coming up. This looks worse than it actually is because there's a couple of big dividends sort of lurking in there over the last few days from Woolworths and Coles that are bringing that down. It's better than it looks. And then the telcos, I think, I was going to say neither here nor there, they aren't. And obviously I've talked to you about the sectors that are really, really struggling. But that's not a bad thing. That's a good thing because there are some amazing shorts that have been able to be had and probably still able to be had in those sectors. It's kind of the best of both worlds when you've got the longs doing their thing and the shorts doing their thing at the same time. Let us go to the base metals to see if we can see anything interesting going on here. And we'll go to the line chart there, and maybe let's zoom out a little bit. Neither here nor there. On aluminium, not bad, not terrible. Copper doesn't look great, trying to rally at the end there. Iron ore doesn't come up because there's a percentage sign in its name over here, and if I delete it, then it does appear, and that looks pretty bloody awful. Let's go to nickel, which looks pretty bloody awful. Lead looks pretty bloody awful. Let's just say PBA. Tin actually doesn't look terrible, and zinc is close to a PBA. Lithium carbonate looks pretty bloody awful there, PBA, but if we go to the candles, interesting little candle there, today's candle, engulfing and white. I know it's minuscule with respect to the rest of the downtrend, but that's an interesting little candle there, let me say. Let us head over to the screen here, which is called the Trading View screen, and that's not where I want to be. So let me think how I can change this around, because that's you. That's you. That is a Chrome screen. So OBS has attached itself to Chrome, the wrong Chrome, and I reckon I can change it to the right Chrome. Another one. That's the no, that's Amy Broker. That's even worse. That's the one we want there. That's a market index. If you don't use the market index page, you should. You'll find a bunch of my articles there. For example, worth mentioning, obviously the evening wrap today, where I did do some analysis on US indices, but this is the big one. This is the important one you need to read. Is the stock market about to crash? How to spot the next bear market in advance. And I love this. I'm really proud of this article because there's a lot of research that's gone into this, where I actually go through every bear market and every correction over the last 30 years. And there's a lot of work to find out these different falls over time, and then put them chronologically for you. And what you can actually see is that most of the time, the big bear markets are actually preceded by a correction. So correction, the definition of a correction is a fall of 10%, but less than 20. Bear markets more than 20. Anything less than 10. Thank you all for all your claps there. I'm glad you did read it. And yeah, so it's this little correction we're having. This little pullback we're having now, because the fall is 9.7%. It's not a correction yet. It wouldn't surprise me if we were in a bear market in, say, 3 or 6 months' time, and this was the first shot across the bow. Hey, we might even make a new high between then. But I was surprised. It shocked me to find that we're having a correction or a bear market on average every 7.5 months over the last 30 years. I would not have picked that unless I did the research. Anyway, I'll let you go through it, and I'll go through each one of the bear markets, all 7 of them, since over the last 30 years, and just talk about how similar they are to what's happening now, how they're not. But the patterns are pretty similar, and you guys and girls, you know these patterns already. They're not new to you, but hopefully it also reinforces for you that you're going to be fine. You'll be fine. You don't have to fear the next bear market or the next crash, because you'll be fine. You'll see it coming from a mile away. It won't just be me talking to you on a Monday. No, you will know that when it's happening yourself. The only one where you might not figure out if it's going to happen is if you get one of these, like the pandemic, where it just comes so far out of left field. There's nothing you can do about it. Anyway, I'll let you read that in your own time. I was heading over to here. We'll finish our whip around the grounds. We'll kick off with gold, which I still think looks okay, but I'm frustrated, probably like you, by the fact that this thing just cannot do what it's meant to do. I feel it should be doing better than it is right now. This, an interest rate. So we're expecting rates to fall. That's when gold is supposed to do its best. Either US candidate is going to continue to spend like crazy, and that helps debase the US dollar, if you like. So it should be gold's time to shine. And when everything's kind of going for something, and it doesn't go, that's a little bit disturbing, but happy to stay the course on that for the time being. Silver looks a bit rubbish at the moment, so a bit ho-hum. So does copper, but we did see that little bounce there on the LME contract, and this one I would say is neutral at best. At worst, it's look, there's a short-term downtrend, and I think the long-term trend is changing to down, but until it probably trades with a 3 handle for at least a few sessions, you'd probably give it the benefit of the doubt in the meantime. You can't give that one the benefit of the doubt. That is very much short-term downtrend. long-term downtrend, but I did mention last week this idea that it's a little bit of a race against time for this downtrend because seasonally, we're coming into a very seasonally strong period for iron ore. Uranium hasn't done anything since our last update, but many of the energy contracts have dissolved on this idea that we're going to see weaker growth in China, but also potentially in the US and the Eurozone as well, and that's the price of Brent crude. But we have seen thermal coal come back, a little bit disappointing for me. I thought that might get going, and then coke and coal is moving in line with iron ore, which of course together are the key components of the steelmaking process. I'm just going to have a look. We haven't looked at this one for a while. Cocoa, what's going on here? That's okay. Everybody talks, Freddo frogs are more expensive, or caramello koalas are more expensive, apparently. Let us quickly finish off with a look at the bonds, and we've got the US 2s, which are still cascading down. That's disturbing. Remember, we reached that inflection point. I won't bore you with the details again, but obviously here this was okay. And stocks were loving it, and then we reached that inflection point where this is not okay anymore and stocks hate it. So we're still in that phase. That's the point I want to make, is that sometimes you look at these macro charts, Carl talks about them all the time, and then you kind of figure, am I willing this one up or am I willing this one down? Just have to remind myself, no, you're willing this one up now. I know that's different from before, but you're willing this one up. Let's have a look at the Japanese 2s. See, this crash here was with the stocks, so this one's a little bit confusing. Now it's heading back up, and stocks are still going down. I think you still want this one to go down. I think you still want lower rates in Japan, not higher rates in Japan. Okay, because this might be ratcheting up like it did before, because you're about to get another shift there, which could jeopardise a carry trade. So either way, none of those are good for stocks, let's say. And this one's a little bit neither here nor there, not as decisive as the US bond picture, because our RBA is still quite hawkish in comparison, but hey, our rates didn't go up nearly as much as theirs. I don't know if that means anything to you, all of that talk. How long I've been talking for? About 17 minutes. Does it mean anything? Don't know. Maybe it makes you feel better about what's going on in the world. Let's head over to the charts, of course, and try and look at the world from a different perspective now. There's a maelstrom, isn't it? There's so much uncertainty at that high level that we just talked about, and yet I can show you these charts here and say there are some really nice charts. I might go to the broader list here. So this is my scan today. That's obviously not supposed to be there. I put them in the wrong place. I've mixed them all up. Yep, I have mixed them all up, which is annoying. Oh, well, we should be able to tell which ones are longs and which ones are shorts, shouldn't we? So that's obviously one that's a short. That one's a short there, Bapcor. That one's obviously a short. Beach Energy. Yep, good, thank you. Here we go. Back to Amy Broker. You didn't miss much. I was just talking about how at the high level it's very uncertain, but looking at some of these charts here, there are some really nice moves. Albeit some of these are a little bit obscure. The Apium, Animal Health, AI Media Technologies. This was the shortlist of the shortlist tonight. Biome, Botanix, CBA, CU6, EZZ, FPH, GTK, HPI, HUM. These were all automatic plus 1/3 for me. LYC, MVA, that's the property ETF I told you about. NAB. Sorry to steal your thunder if you're going to ask about some of these, but we will do more analysis on them. OPT, PME, URW, and WTC, and that was, that's the shortened list. I did want to show you. It was my intention to show you the bigger list that this was shortened from, because it was so hard for me to split them. I could have had another 20 on there really, and then we had the shorts where they just look horrendous. And so even that is still I think a coiled spring to the downside. And there's been such consistent moves. Dominoes, that was IGO. That's John's Ling. I mean, what a great trade that's been. Karoon, NIB Holdings, Ramsey just looks awful. And before you met me, you probably wouldn't believe that stocks could be so bad. With such blue chips, such quality on sale, but yet they continue to be sold off. Let me get to your requests now, and we're going to kick off with the offline requests, and the first one is Daniel, who's asking for Catapult Group. which still looks good. I don't think it's given us a lot of reason to do much, but just sort of hang in there. Full risk, you can see full risk position, even full risk position here the last time we looked at it, and I don't think I need to change a whole lot. In fact, I don't even think I even need to change the level at which you'd not be full risk position. I still think it's down there. If you got some other sort of price action, something that didn't look so good in the meantime, that's a bit wonky, isn't it? Something like that, then you might have another level. Look, under here, perhaps, just as there is a little trough. Is it a trough? No, it's not really. It's not a trough. This is so this is an inside bar. That's an outside bar. But I can certainly see some demand coming in there. I'm splitting hairs. I don't need to talk any longer about this. It really is unnecessary because it is still FRP. Would I add a third on this one? It certainly made the shortlist today, but it didn't make the shortlist you just saw, which I feel, my own opinion, whatever that means to you for the next day, is the best of the best. And the only reason why it didn't get it was just that little upper shadow there. And I think you'll find it. You can see it's a bit longer now that I move that name tag, and that's why I didn't put it as a plus third today. So certainly FRP, and I've given you some levels as to where that might not be the case. That one was for Daniel. Let's go to Adrian, who's got Botanix. So I'm a plus 1/3 here. There's a tiny shadow there, but you can see it's much smaller than on the other one. And there's just so little downside volatility through here. So if we compare the last two, and why I would put a plus 1/3 on Bot and not Catapult. And I know don't forget, they both made the shortlist. It's splitting hairs a little bit. But this is showing, this is a bit more history of certainly lower peaks and lower troughs, but more downside volatility. Whereas if I go to Botanix, it's just very little downside volatility after this move in particular. So I think that is a much stronger setup. So for you there, Adrian, that is not only a full risk position like last time, but I would actually go so far as to go plus 1/3. If you don't have it, then that should be obvious to you what that means. Let's go to his second one, which is IMM, which did come up on the scan today, but I didn't shortlist it. And obviously I didn't shortlist it for obvious reasons. I think it's okay. I'm not as excited about this one. It still has some work to do. I mean, there's still a big point of supply up here. There's one here. The candles aren't as convincing. I've got a bit of a shadow there, and today certainly wasn't good enough in and of itself. It's not far off though. Okay, so this is a good comeback. This is a nice V-shaped rally. We've pushed through the long-term trend ribbon. We've come back. We've held it nicely. Those two lower shadows there are impressive. Since then, this candle is the key candle, and we're short-term uptrend, again a long-term uptrend. So there's a lot going for it, but for me it's about quality, and I'm not sure the quality here is as good as the first two we've seen. If there's something about this you like, if you know it, there's a story, you've got to have it, no problems. There's certainly enough there for me to give you the green light on it, but for me, for my money, I don't think I'm going to go here. Also, the other thing that concerns me, it's a bit of maybe it's something I haven't discussed with you before, but I do say the leopard doesn't change its spots, and I look back and I think that when it was good, look how hard it was to go up even when it was good. So what am I hoping for now when it's had some issues and it's trying to recover? I mean, if it wasn't fantastic when it was good, what am I hoping for now? So that's kind of pushing me off it as well. So some of it's a little bit subconscious as well. But hey, if you've got it, there's more than enough there to stick with it. It's not for me in terms of plus 1/3 right now. The specific question there from Adrian is, would you consider an entry now or wait to clear the point of supply at 45? I don't think you need to wait for 45. I think there's enough there, if this is the one you like, to go for it. There's enough evidence to do it. You might wait for the next high closing candle. That's the only thing you would wait for. If you were excited enough about it, today's candle is fine. We're splitting hairs, but it's not for me. Peter B is asking for Cettire, which is a really interesting chart. I'm actually glad this one came up. Peter said, I wasn't as enthusiastic about it last week for a long. You can see here I said exit shorts. So exiting 2/3 of the shorts, and I would suggest to you that today's candle you would not want to be short this one at all. But does that mean therefore we can be long? And the only thing this would qualify as under my model is an aggressive trade. It's too early for a turnaround play. It's obviously not an uptrend. And I think there is actually some good stuff going on here for an aggressive trade. Do we have a basing pattern? Look, it's not huge, but I do feel, you're trying to understand my discretion here, I do feel that is the minimum for a basing pattern, okay, in terms of duration. Let's say it's 3 months if you want to have a rule for it. When we made the basing pattern, did we see a huge influx of volume at the low? We certainly did. Did we see some price action confirmation? No, I don't think we did, and I think we're missing a little bit of that here. So it's getting marked down a little bit there. This move, though, did we see higher volume? Yes. And what's the importance of that volume at these lows? What's the importance of the volume for an aggressive setup? So we don't talk about it so much for the continuation setups. We talk about it quite a bit for the turnaround plays, don't we? So there's this idea that, yes, volume's important, but it's important at different setups, different times of the trend. And this is all about flushing out that final bit of supply. You know how it feels. You've probably been that final bit of supply. You've been that person who sold right at the bottom in pure disgust that you've made this huge mistake and this thing will never go up again, only to find that it goes up again. So we really want to see that supply get into the market, because when that supply gets their money back, the great thing about those poor buggers is that they have cash now. That's great for us, because we need them to have cash, because they become part of latent demand. They've got a history. They might well come back into it if it starts to go up as they regret what they've done. So we want to see that changing of the guard. And obviously with great selling, if there is great volume, then there has been great buying as well. So we do have some fund managers looking to take a stand here, whether that be on the basis that there is actually value, and there is actually value, because in the absence of that volume, and that turnover, there is no value here yet. Do you see the difference? Do you see that? I mean, this is the first one I've picked, and hopefully I can find some others tonight that kind of prove my point. But there's no value here, but there is value here and here. And lo and behold, everybody, did you notice where the value seems to have come in? And I could just imagine Mr. Value Fund Manager, like Mr. Value Portfolio Manager there, looking for value. There's no value in this market, Carl. But Cettire at $1, that's value. That's deep value. And at $1, because that's the number, isn't it, that matters. But you can see the volume is telling you that someone sees value there, not us. Hey, and to be fair, they're right. I know I make fun of them, but the fund manager, it is an absolute fact that the fund manager who saw value at $1 is right. And they're right to the order of magnitude of 60% right now. So guess who's laughing at Carl? All right. Now, the difference there is subtle. Okay, everybody's tuning out. I can see you're tuning out. You're going to go find that guy and listen to him. The point is, we're not doing that analysis because, number one, we're not smart enough. Hey, Carl, I'm pretty smart. No, we're not as smart as Mr. Deep Value Manager, right? He's got half an alphabet after his name. Number two, we couldn't be stuffed. And that's the main reason for me. I really couldn't be stuffed doing all that work, because if I was going to do all that work, I could only do it on a handful of stocks. And that's what these guys and girls do. They do it on a handful of stocks and they're experts on these stocks. And that's fine for them. But we're not them. And that's the thing. So we have to trade like us, not like them. So we're going to use our brains, not our brawn, I guess, or our smarts, and not our intellectual crunching power, to look for where they are active. And that's what my model is really doing. Carl does technical analysis. No, Carl is just trying to figure out whether people who do fundamental analysis are acting in the market. So yes, that is value. And yes, hey, they're right. But we need to find a way. We need to find a methodology, a set of rules, whether it's a black box or a common sense system that keeps us safe from getting in here. And that's what it's all about. So I've given you some rules. These are rules you need to know. I know you're starting to know them. I know they're starting to become innate because through repetition, hanging out with me Monday nights, you're seeing them. This is the important one here. This is the important candle. If I saw it here, this would have been an even better aggressive setup. Carl, what about that one? Yeah, I see that one too, and that is actually catching my attention. So this is important. This is important. The volume's important. The sideways nature is important. We're seeing a build up here of white candles, a predominance of white candles. We're seeing a move back to high peaks and high troughs. The only thing we're not seeing yet is the short-term trend ribbon turn up, but that's probably not far away. It's amber, it's converging. it's close enough for me. The other thing we're seeing here is that the short-term trend ribbon is going from offering dynamic supply. That's very clear. This is the stuff keeping us safe from trying to think we know better than the market or better than Mr. Value Investor, right? So that's a big tick there. I can't see a lot in this that would dissuade me from taking an aggressive trade on this one, okay? So I would say not only are you out of your short trades here, but if you wanted to do a cheeky little plus 1/3, okay, I can see that. But because it's an aggressive setup, you know my opinion on this, I just put a little toe in the water. And that is because I'm still a dyed-in-the-wool trend follower, right? This is an aggressive setup for me, and that's the way I want to behave. Hey, if you think Cettire is a great company, or your risk appetite is sufficiently greater than mine, then you can put more on it than that. I'm just telling you how I would do it. You do it your way. And the reason why I think this is even more okay is because we've got a bit of leeway till we get to this dark red zone, which we know has an extremely high chance of offering dynamic supply. Okay, you've seen that happen a million times. So we want some room before we get there. We want to be in a position where we've pretty much taken that 1/6 to break even when we get there, and we've got a little bit of a free swing at this one developing into the next stage, which is a turnaround play. We're probably going to see lots of examples of that today. Certainly this one is a developing turnaround play. Certainly the that APM, is it APM? Not AMP, that AHX. There you go, APM Animal Health. So here, ladies and gentlemen, you're seeing how my model progresses. I can't pick the bottom. I'll never be Mr. Value Investor buying at $1, but I'll be buying at hopefully 140 or 150 or somewhere, hopefully a little bit less, but you know, that's where I start to get risk in. But at least I'm not guessing like everybody else on the way down. So these are the Lendlease. I'll show you that one. See, I think this is a turnaround play as well. It's doing all of those things we want to see. And then you go to the next extreme, which is like a JBH or something, which is your continuation place, etc., etc. They're the three phases, really, to keep us safe in the market. Let us keep going. I think I've given you your answer on that one, P to B. ABB is actually a bit of a turnaround play as well, because I put that in today's shortlist. I didn't give it the 1/3. I didn't get it into the shortlist because I'm a little bit concerned, Peter, about this area here, and that's all it is. You know, that area, it's $4. I know we've been to $4 before, but looks, for people that got in at 3, they might be looking for a quick turn. Those value investors looking for a quick turn. They always get out too early, don't they? You always hear the value investors complaining. That's because they're tight asses. They love stuff cheap. And as soon as it looks a little bit expensive, out they go. Oh, I sold that about 30, 40, 50, a million% ago. Woe is me. Isn't the market expensive? Let us. So I like that one. If you like that one too, it's in my shortlist, which means it's a plus 1/3. So let me write that on the screen. Plus 1/3 FRP plus 1/3. The value investors lament everything's too expensive. VYS. Okay, look, certainly yesterday impeccable. Today's candle not ideal. Wasn't a great day in the market today, you know. So you can probably forgive it, that one. Is it the start of something sinister? Look, I don't know. I just don't think you need to do anything with it right now. You know what to do if it does turn out to be sinister, if it starts to make lower peaks, okay, if it starts to reaffirm this area as more than just a point of supply, but also as a major point of supply, then we've got problems. If it starts to close beneath, troughs, for example, that one there, we've got problems. If it starts to close beneath the light green ribbon, we've got problems. Just giving you some tips if I'm not around to talk to you about this one, or you don't ask about it for a while, but you can ask about it next Monday. What would I do with this one? It's a full risk position for me. There's no reason not to have a full risk position. Yes, that candle's a little bit disturbing, but not enough to push me out of the trade. Obviously, I'm not adding risk because the candle's not good enough. Craig is asking about S32. Not sure why we're asking about this one. It's not in the category. I mean, now that you know, I've given you such a detailed explanation of what I'm looking for in an aggressive setup, surely we must therefore all agree, it must be unanimous, there's absolutely no reason to spend another second on this chart. So let's keep moving, because we're not here for shits and giggles to just look at stocks and look at charts and go, well, that's interesting, are we? I mean, that's what we're doing with thick markets where it was all comers. Here, we should be far more disciplined and far more focused on just learning and executing the system because it does work. Anyway, I think it does. Let's get to your requests now, and in that keeping, if it's not one of those three setups, let's just keep moving. Hey, SLC, that's the challenge. Certainly, this one qualifies as a continuation setup. It looks fantastic. We are seeing some supply come in, sort of in the shadow of $2. I wonder if that's having a little bit of an influence here. It's just playing on people's mind, but it's not enough, I think, to push me out of a trade. Much like the last one, you know, where I would start to manage risk, and it's just taking a little bit off the table at that stage, sort of a 1/3 there and a 1/3 there. It could be more if the candles aren't very good, but in the meantime, it's a full risk position for me. Those last couple of shadows there are a little bit disturbing, but no, not enough to push me out of a trade. Would I add a third on this one today? No, because those upper shadows are a tiny little bit concerning, and I want to find the best of the best of the best of the best. That one was for Max. Max has also got GTK, which actually is in my shortlist. Guzman Y Gomez. Did anybody buy this one? I mean, I've put it in probably close to 10 times, maybe 12 times over the last few weeks. So hopefully a few people got that one. It was highly featured. There's this one here. I don't think so, which is surprising. GTK. That's where I'm meant to go, and I think this is a strong one today. It's a good candle there. There's a tiny little shadow on it, and I forgave it that shadow because it's $10. And I figured, hey, if that is the entire response to $10, then I think it's fine. So everything else obviously checks out. So FRP plus 1/3 for me. FRP plus 1/3 on GTK. I have no idea what these guys do, but it hasn't stopped me from putting it in the list many times. RUL, different story here. You can see FRP a while ago there. That would have changed over time because there's been many exits since then. Let me just get the normal zoom going. Let me think about this one. It's not straightforward, is it? You know, like which category does it fit into? When I pause, that's what my brain's doing. Okay, is this one of those three classic pictures that I normally look for? And it's not. And if I'm scanning through a list, I would probably go over this one pretty quickly. So, you know, it's good, but not that good. And then I'll be in the next one, and the next one. I literally, that's what I said about this one in tonight's list. I said, well, that's good, but I reckon I'll find better. Boom. And I went, and that, if that was the only chart we looked at tonight, and if that was the only chart we looked at tonight, they were the only two stocks on the ASX that actually looked like the best two stocks by default, but that actually look pretty good. But they're not. And there's a lot to like about each of those. But I don't think I'm going to buy this one with my own money. For your money, though, if you like it for whatever reason, that's probably why you're asking about it. There's a lot to like about it too. Don't get me wrong. It's held that really well. There's some great candles in here. Couple of little shadows, but I'll forgive it because of the short-term trend ribbon. This is impeccable. That's perfect. This is all good. This is a good candle as well. Why is Carl not naturally gravitating towards this? I'm a bit worried about that. That worries me. I think there's some work to do. It doesn't worry me in that, it's going to go there and it's going to crash. I really need to be careful when I say that. When I say, that worries me. The only reason why that worries me is I think it could get stuck there for a while. There's a bunch of supply up there. If you don't believe me, well, make a case. Tell me why there isn't supply there. I look at that, so there has to be supply there. When the price interacts with that latent supply, it could get caught up for a week, for 2 weeks, for 3 weeks. It's not what I'm trying to find right now, which is the path of least resistance. And that's why I would go pop, and then pop, and then pop, and then pop again. But they're all good case studies. Thanks, Max. FRP, if you've got that one, for me, I'm not adding a third. Who's got TRP, which I have no idea what that is. Tissue repair. Okay, well, a little biotech company, I'm guessing, not coming up on my scans, probably because of the liquidity filter. Doesn't mean it's a bad stock, just means it's not meeting my liquidity filter. Let me just get to the default zoom there, which it is. I think this looks very good. I would be more comfortable if the price action was cleaner. So I want to see more of this sort of price action because I feel I'm seeing more of this sort of price action. Okay. All right. And certainly if we had to say, label them, say that was A and that was B, I'd say picture A for me is better than picture B, even though they have moved the same amount overall, haven't they? I think just one's giving you fewer headaches. One is, I feel, going to be more sustainable than the other. So that would push me, that puts me off a little. But yeah, look, I don't think there's any reason why, if this was the one you really liked, to have a go at it. Certainly everything else is checking out. So this is all very good. It's holding that short-term uptrend ribbon really well. This has turned, obviously I love this. This is the clear winner there in that picture. I would put to you for this sort of stock with a total history of sketchiness, it's actually getting its act together in terms of liquidity and price action and candles. And today's candle is very good. It's hard to see what the volume is because of this has skewed it, but it does look like down the bottom there there's something going on. So yeah, look, if I had it, I'm certainly an FRP. If you really like it, yes, I could also go so far as to say that. If this was in the list today, if I did see it, if it had met the liquidity filter, I feel it would have been shortlisted, but I don't think it would have made my shortlist. That's what I feel. Wisetech did make the shortlist because you can't doubt its credentials there. And today's huge engulfing candle engulfed about 4 or 5 candles before it on a day that really wasn't that great for the market. I think is pretty impressive. So, if you've got this one, obviously you're holding it, and if you don't, as hard as it is to do, and maybe you do a 6th or something, or just get a little bit of risk on it because it's you can't argue with that sort of a chart. Let's go to Housel's third one, GQG. Oh, we've got some problems here. What did we say last time? I feel that we've got some close minus 1/3 here, and I'm not sure when we looked at it, as in if we looked at it after writing these. It might have been somewhere along here. It could have been on that day when it looked its best. And this is the only flaw in my model, is that, and it is a flaw, I'm not being sarcastic here, it is a flaw in my model that I will tell you that this is a full risk position plus 1/3 on that bar. And this should frighten you a little bit, because I'm fully prepared to, every time I see that candle, to go FRP plus 1/3, knowing full well that this could happen. But you go into these things knowing how to get out of these things. And I don't think you'd have any risk here. I can't really see why you would have any risk, because after this has occurred, you've also made a little trough here, and that's a problem. So that's probably then become your first third, which means that's your second and that's your third. You're also closing beneath. I just can't see any reason to have any risk on this at this stage. Certainly not after, say, that candle. I think you're all out there. Okay, so where does it leave us now? Zero risk position, but today's candle is interesting. That's probably why Housel's asking about it. So we're really looking at this. We're really looking at this idea of it coming back, testing, really for the first time since this uptrend began, that long-term uptrend ribbon. So many times we've seen things do that and then just go straight back up, like magic from the long-term uptrend ribbon. That is a good candle. It hasn't happened, I feel, on a great deal of volume, even if I push that out there. It's pretty muted today. And for it to go up with that sort of candle as the start of the run, you're kind of saying, well, there was motivated demand clearly because we had a white candle. There was very little volume, so that motivated demand just meant very little supply. All of a sudden, there's a supply vacuum. And if you believe that after all of this, then I think you're being a bit risky. If you believe that all of a sudden there's a supply vacuum, because that really is the only way I can see it. Now, if there was a huge volume response, that we've got huge demand taking out huge supply. That's the last bit of supply has come into the market, and yes, demand, the value investors have come in and soaked that up at 250, a nice round number. That hasn't happened today, Housel. So if you're buying it on the basis of that candle, on the basis of it rallying out of that long-term uptrend ribbon, on that volume, you are then saying supply has completely evaporated. And I think that's too much of a leap to make at this stage. It's a pass for me. I could totally concede that we come back in 3 weeks and it's trading back up at $3. And I should have told you to buy it. Now, if it does do that, I think we'll find other signals between now and then. It won't be here at 255, but it might be at 260, 265 when we're starting. We've at least made a little bit of a higher trough. Man, I'm drawing wonky tonight. And we're seeing, at least another high trough coming in. We've got another candle there. We're paying a little bit more, but we're getting, and maybe we've got a volume signal as well. We're getting a bit more confidence with it. Let's go to CVL. I do have to stop you a little bit early tonight, everybody. So we might not get to everybody's requests. I can't find CVL, so I'm going to keep moving in interest of trying to get to everybody else because that's like the second one or third one on the list. Let us go to Nigel has asked, hi Carl, upon entry, do you use a stop loss or do you still use your candle analysis to exit? So yeah, I'm definitely a soft stop loss person, Nigel. I don't like to have hard stops in the system. Typically, I'll let the candles do the talking and then I'll make my decision. And I do like to, if I have time, I've got the ability to do it, do that analysis very, very late in the day. So that last half an hour, see if there's anything that I need to do and just get it done on the day rather than waiting for the next morning. If you don't have that ability, then you're doing it overnight and you're getting everything done first thing in the morning. So yes, I always have this deep-seated fear of stop runs and my stop getting taken out and then the price just going straight back up again. So, for me, it's all about where the candle closes and it's about the candle closing on the other side of the key levels I've identified, and that's when I do tend to act. If you prefer, hey, you can go 50-50. You might set up half of your position with a soft stop and half with a hard stop because you want that peace of mind that if the market does slip and then keep going, you're going to have some protection. So, you can be half pregnant here. You don't have to be all of one and all the other. Find what works for you, and then you might be a transition period where you're transitioning from hard stops to soft stops because you need to prove to yourself that they work. Hi, the banks still look good, and they certainly do. So let's have a quick look at those. A few of them are in tonight's. In fact, I reckon they're all, apart from ANZ, are in tonight's shortlist. So normal there, and ANZ, still magic, didn't quite get in, obviously a little bit of a shadow, but still magic. CBA, I feel happy when I look at the banks because it just, I just know so many fund managers are underweight these banks because they think they're expensive. And that makes me happy for some reason. Perry's saying, let's look at AAR. Yes, that came up on my scan today. It went into the shortlist. Shortlist, it got plus 1/3. Perry, let me write it on the screen so it stays there for next time. FRP plus 1/3. And we've got AIM, which, as you saw, was also on the list as well. It's been in there a few times actually now, but that is a tremendous looking candle. There's a plus 1/3 on that one. Thank you for those, Perry. CDNA, we'll do that when we get to the US ones. Please don't type any more in because I might not get to the ones that we have on the screen. I have to go pick up my daughter from dance, I'm sorry. Let's go to MAF. That was on the shortlist today and was ever so close to getting, I had 22, so I had to, I had to draw the line somewhere. It's very strong. It certainly could have gone on the shortlist, but it is a no-brainer, I think, for FRP and a plus 1/3. So we're looking very much here at turnaround play. I love this candle here. Why do I like it so much? Primarily that. I love to see this. And then when I see a very, very muted supply side response to that, because you've got to remember the mentality of most investors is when something goes up that much that quickly, is that it's automatically too expensive, or it's too expensive for the little brains to comprehend. When something goes up that quickly, that much, and therefore there is no selling, it's not too expensive. There's a wall of demand. Yes, it'll take a little bit of time because some people do want to sell. That's why it stopped there for a little bit. But once we get through that very short-term latent supply, there's only demand in the system. So I want to be part of that. Let's go to... I said I was going to highlight these, didn't I? No, I haven't. So let me do that now. Okay, let's go to Robert. Robert's asking about Lendlease, which obviously we have talked about as one of my favourite turnaround plays. I can't believe I'm saying that out loud. Lendlease is one of my favourite turnaround plays to go long. My mind is officially blown. I mean, let's face it. Let me just go back. I know there's some candidates there, Domino's, Ramsey. But this is the worst stock. on the ASX for the last 2 years, 3 years. Seriously. And turnaround plays are more risky. They are more risky, ladies and gentlemen, because who's to say we're not here? Or we're not here. It's tried it before and it's failed before, okay? So that's why they're more risky. But we do let these things develop the way they do because it does de-risk them. And I think with those candles, dare I say, this time it's different. ASK, which is pretty good. It's just a bit sideways. I think I certainly put it in here. I think that is the candle that I kind of got sucked in, maybe, and I put it in, or maybe I put it in here a little earlier. But it is a little sideways. And, look at the scale sometimes. You think, okay, yes, that's kind of looking good with price action, but it's a total move over the last 3 months of about 8 cents. And therefore, over the next 3 months, I might get 8 cents out of it. It's still, 7-8%. But it is a little bit stunted in that regard. But it's fine. It's okay. It's not one I would automatically gravitate to and buy now, as you can see, because it's very sideways. But if you've got it and you feel that you're stuck in it, well, you should never feel you're stuck in anything. But, you can hold it. You might get the price you got in at to get out again. I don't know. That's for Robert. Let's go to Max, who's got SLC, which we have done. We talked about that one. We said that, look, it looks very good. Certainly not enough in those upper shadows to push me out of a trade. There's, I think, a little bit of trepidation at $2, but otherwise it's still very, very strong FRP. GTK, which we said was a plus 1/3 for you, Max. That's not that one. Green technology metals, all these technology metals, how silly. GTK was that one. We said FRP plus 1/3. It's in the shortlist. RUL, we pondered for many minutes and we said it looks very good, but I'm just not sure if it's for me. And that is my timer, which is telling me to tell you to stop putting in any new ones, which I've done. And we've done Wisetech for Hoozle. We've done Hoozles. We've done CTT for an aggressive entry. I know these have been typed before. I've talked about them. Roscoe's got, hi everybody, he was a bit late. Thanks for letting us know, Roscoe. The article today was a ripper. Thank you, Roscoe. Sand saying, good evening, Carl. Please review the following US stocks. We'll do those in a second. Hoozle saying, read the bear market article. Thanks, brilliant analysis. Thank you, Hoozle. Adonis, hi, Carl. A couple of currency pairs. Okay, well, let's look at those. And let's head over here. Oh, no, I will change the screen. I have changed the screen. Let's go to here. And EUR, USD. Let me go to the other watch list. I'm in the process of getting those watch lists for you. I might even get them done tonight for you, okay? But fingers crossed. I've had an extremely busy week, this week in particular. It's on my mind. It's playing on my mind. I know I've got a few emails I need to answer of yours as well. I will get to them, I promise. EUR, AUD. I think it looks okay. It's very sideways. I mean, if we literally drew a line from today's price, well, let's hover over there. It's the same as where it was literally a year. I'm not kidding. It's exactly the same price as where it was a year ago. And that just kind of feels to me, look how flat the trend ribbons are, that it could be the same price in a year from now. So I'm not sure about that one. Look, certainly there are, and this is classic FX, occasionally FX trends on a daily chart. Most of the time it chops around because we're talking about the entire value of one country versus the other, ultimately. They don't move so much. They can trend, but it's not the norm. I feel it's the exception. That one's very sideways. Certain pairs tend to trend better than the other because of the carry trade. This is not one of them. I'm a pass on that. I can see maybe pushing into 170, 180, but, look at the scale, 170, 180, there's no 180 there, 168, 170. NZD-CHF, NZ2 funding currencies, NZD-CHF. I reckon this is probably a bit sideways. Well, it's trending lower. For a short, I'm guessing, Adonis. Yeah, look, I can see this. I think this is a stronger trade than the last one. I can see this for a short, yeah. I could add a third to that one at this stage and then see how it goes. And if it keeps going down, I could add another third to that. That's probably the clearer cut trend of those two. Let us change screens, and we're going to go back to Roscoe's asking for APX, which actually I had to think long and hard about today. It certainly made the shortlist. It has to be in the shortlist because of this big candle today. I mean, I don't think we were online. I hope you were, because I know a few people had this one. That Is that enough? Into 150, a big candle. I think you could easily have done a third on that day and not felt too bad about it. I think that's where your next third is, and that's probably where you're all out. This is not enough to get us back in. I think this is enough to have a little bit of a nibble. But today's the first clear-cut day, because really, you think about the damage that is done through here, here, and here. We need to undo that damage with demand. And this candle is very strong, but I just don't think on balance it's enough. When we talk about balance, you could almost really take a 50% retracement of that whole move, and that's the balance point of the move, I say, and I think we're closing above that today. So look, on balance, and I'm not a Fibonacci person, okay, I made fun of it last week, the Fibonacci retracement, but I do believe in balance between demand and supply, and I think if you're getting back more than 50% of what you lost, I think on balance you could easily argue that, well, the shift, there's been a shift in the demand supply environment. That's the way I look at retracements. The other levels are meaningless to me. So I think today is certainly the day where you add a third. It didn't make the shortlisted, and that is because I think the other ones were just so strong. On another day, it certainly could have. But if this is one you like for whatever reason, then I'm 100% FRP plus 1/3 here. Okay, if it's on the shortlist, it is a plus 1/3 in my opinion. Let's go. That's Roscoe. Adonis wants JDO, which I still think looks very, very good. Last time we looked at FRP, it hasn't quite got going since then, but the market hasn't been great either, so I can certainly forgive it that. It's still very much intact. Look, keep an eye on sort of this level here. We don't really want it to close under that, but even if it did, I still think there's plenty of protection here, so it might be more of a that level there, and maybe do 2/3 at that level instead of just 1/3. But look, very much intact and no complaints hanging on to that one. Perry's saying, I sound like a Team Invest team, probably when I was channeling the value investor a little while ago, or maybe when I said we sold it about 80% ago because we thought it was too expensive and it kept going. Maybe that was me channeling Team Invest. Got a multi-decade experience with Team Invest people. They're good people when you speak to them, but I don't agree with anything that comes out of their mouths. And there is an exception to the good person when you speak to them, from one of them. But I'll let you guess which one that one is. Let us go to... what are we doing here? Owner bought a lot of shares. Yes, that is San. That is why CTT is going up, or it could just be because there's excess demand. Peter's saying, different Peter from before, AGR. Well, okay, this looks very good. Hasn't been coming up on my scans, I'm guessing because of the liquidity filter, but I like this one. And it's a little bit sketchy, it's a little bit liquid. That's the nature of the beast. Certainly there's enough volume, and the volume is key now because the volume is interest. It's like the volume on your stereo. Turn it up and people are listening. If it's turned down too low, nobody knows it's there. So yes, look, I could go, if you had it, FRP, but I could add a third here. It's a cheeky third. If it's a 6 you want to add, this is nothing more than a punt, though. It is very much in the punting basket. Let's go to MTO, okay. That's, yes, a turnaround play, certainly, very much so. No objections here. There's a bit of supply potentially coming in around here. Just keep in mind. So look at this within the context of, say, a Lendlease or some of those other turnaround plays, APM Health, we talked about AMA, and just work out your reward to risk. But no objections at all. I mean, if you don't believe me, I'll write it on the screen here. Look, FRP, if you've got it, I'm not sure if I'm a plus 1/3 just on the basis that it's a bit close to that potential supply zone. But certainly if you've had it, happy to hold on to it. If you have been suffering through it, hey, it's looking a bit better than what it was. Brambles, it still looks fantastic. FRP, nothing's changed there. Don't need to add any on the basis of the last candle because, it's just not as convincing as it should be, but definitely hold on that one. Michael's got LV1. Live Virtue, another one that I haven't seen, but it looks very good. Today's candle wasn't ideal, but it's not a deal breaker. I still think this is very strong. I like actually the volume seems to be sort of bubbling back into it. The price action otherwise is still, I think, very good. Short-term uptrend ribbon, long-term uptrend ribbon, all looks very good. Obviously, we actually have looked at this before, haven't we? Because I've drawn an arrow there, and that arrow is obviously where there is going to be some supply. So ideally, next white candle, let's say next, well, not so much white candle, but next high close, then I could go plus 1/3. I think if you've got it, you're still an FRP. That candle's not enough to push you off it. Let's go to Perry's got some US ones. In fact, I'm at the bottom of the list, so let's head over to the US now and let's do those and do this quickly. ABUS. That's an interesting one. Arbutus. It has to be Arbutus, doesn't it? Arbutus? Could be. Biopharma Corporation, immaculate trends straight away. We're not getting any sketchiness here, are we? It's just great price action, great candles, great trends. Let's just zoom out a little bit and see if there's anything we need to worry about. There's an upper shadow here. That's sort of 650, so I'm not worried about that at all. That looks even better on the weekly chart, as we say often with these, and therefore we go FRP plus 1/3. That last candle's more than fine. So plus 1/3 FRP on that one. Thank you, Perry. Perry's second one is AMRK. AMARK Precious Metals. Well, this is interesting. Look, many Aussie gold stocks have been running as well. Let's just have a quick look out the side here. Oh, even better. I like this even more now. Is this a problem? No, it's not a problem for me because of how close we've closed to it. We're too close to it for it to be a problem. It cannot possibly be playing on the market's mind given the way that weekly candle is closed. So no, that is fine. And therefore, with literally nothing holding this back, more than happy to do the same. We're going to go FRP plus 1/3. And save that away. And Perry's third one is SBAC, which is SBA Communications. A bit more of a turnaround play, but you can see it's done all of those things that we require of that turnaround play. Closing above this, which is the key point now, and therefore only that is in the way. 258, 240. I think we've got at least 1-to-1. I'm not too stressed out about it. Certainly if you're looking, well, that's your last point of demand. That's your entry here, 238. 222 is about $16, and 238 we're definitely getting more. We've definitely got more than 1-to-1. So absolutely acceptable there in terms of risk rewards, and the setup is perfect. So plus 1/3 there on that turnaround play for SBA Communications. Thank you, Perry, for those three. Heading back up the list now to the US ones. I've got Sand, who's got PLTR, which is the AI technology stock, Palantir Technologies, one of those AI innovators. It looks very good. I wouldn't be buying it just yet because the last few candles don't warrant that. The price action is also, at the moment, lower peaks and lower troughs. So there's a little bit of work to do. We do have some supply reinforcement. We do have a little bit of demand removal. The short-term trend ribbon is still holding, so that's important. Long-term uptrend ribbon is perfection, as you can see, as that's its job, and that's why we have faith in it. We talked about that one earlier on today. Hoozle had it that was interacting with that long-term uptrend ribbon, and that's why we have so much faith in it. So there's lots going for this one. You can see last time we said FRP plus 1/3. I'm not going to say plus 1/3 this time. I think you can still go FRP, but I don't think I'm adding just on the basis that we need to see. Before we do add, I would say I'd like to see it close above here. So let's say closing above there, and I'll make that work in a second because it's all locked. Maybe I can't. Oh, let's try that. No, maybe I can now. No, I can't. Don't worry, it'll happen. We'll do this, and we'll do this, and we'll do that, and then we'll do that. So a nice candle closing on its high or near its high. Near that level is fine. Above that level is even better, but even just near it is fine. And then that would be where I'd be going plus 1/3. Okay. That one was for Sand, if I'm not mistaken. IoT, Samsara Inc. Oh, this is a nice candle. And you've got to remember, this isn't a candle that opens here, has a high here, has a low here, and has a close there. That is not actually what happened. Okay, this candle, its low is effectively really the high of the previous day. The gap matters. The gap is important. I look at that and I see a long white candle. Okay, so I incorporate the gap into my thinking, and therefore this upper shadow isn't anywhere near as high in terms of the proportion of the candle, it's still too high for me. So whilst there's lots and lots and lots going for this, certainly full risk position. There's not anything sinister enough in that candle to push me out of a trade, but I won't be adding a third at this stage. So ditto on the last one, next high close, and then I could have a crack at that one. I'm getting the wind up here from my wife because I need to go pick up my daughter. So very, very quickly on these last few, let's undo that one and undo that one. CMG. Chipotle Mexican Grill, no, it's not meeting any of the criteria for any of the setups, so I don't think we need to spend any more time on that one. And let's keep going. I think we're pretty close actually. So CDNA, CareDX. Look, I know the last time we spoke about it, I said FRP plus 1/3. It hasn't turned out, and you need to therefore continue to do the analysis. Look for where there are troughs that are made, and when you're closing beneath those troughs, I see in particular that day there is where we're taking a third off the table, maybe even a third on that day. And I think we've either got 2/3 or a third at this stage, no more than that. I would say if it closes beneath the low of Friday's candle, which therefore takes it beneath the low of the downtrend ribbon, that's where we're reducing some risk again. And I think at that stage, at most you'd have as a third, but maybe even a zero risk position if that was to occur on that one. I've got one last one to do, which was the offline request for Micron Technology. That was for you, Craig. I think Craig's looking at a short trade here, and I think Craig's definitely onto something. So we're now just putting everything in reverse. In our brains, we're turning everything upside down. So we want to see the price break below the long-term uptrend ribbon. We want to see it come back, test, retest, and fail. Then it failed. There were some great candles. The short-term trend ribbon is offering dynamic supply. We've got a predominance of black candles. We've got lower peaks and lower troughs. I mean, this is a textbook short trade for me. It looks as good as any of the ones I've shown you in Australia. So let us go FRP on this one. And instead of writing plus 1/3, I'm going to write minus 1/3 because I'm indicating, therefore, that I am happy to short this one for you, Craig, and I really hope, Craig, that you're asking me about a short trade here. Let us wrap up today, because I'm going to be in very, very big trouble very, very soon, by saying that everything we've discussed tonight is general in nature. That's not taking into account your personal financial circumstances or particular needs. So before acting upon it, consider it carefully in that context, or seek the help of a financial professional. Markets are risky, trading is risky, you could lose money. We just saw an example there of one trade that looked great but didn't quite go the way we thought it was going to go. So if you lose money, it can happen, but unfortunately it's your fault and not mine. Never forget that one. Apart from that, it has been an absolute pleasure chatting with you. I don't think that that one's appropriate, isn't it? Let's go back to the... we'll go to something a little bit happier there to sign us off tonight. All the best for your trading and investing, until we catch up again. Bye-bye for now.